Welcome to Investify, where we unravel the mysteries of the stock market and the stories behind the biggest financial moves. Today, we're diving into a saga that sent shockwaves through the financial world. Imagine this. It's February 2023, and headlines are blaring with news that's about to shake the sports and financial sectors. A Nigerian billionaire, Dozy Mmobuosi, is on the verge of acquiring the renowned Sheffield United football club for a staggering £90 million. But who is Dozy Mmobuosi, and how did he reach this point? The story begins with Tingo Mobile, a company founded by Mmobuosi that claimed to be a game changer in Nigeria's agricultural sector. Picture this: over 9 million farmers across Nigeria and Ghana connected through a revolutionary platform, generating hundreds of millions in revenue annually. This was Tingo Mobile's bold claim. The company shot to fame, going public on NASDAQ in December 2022, and its valuation soared over $1 billion. But as we know, not all that glitters is gold. Just when Tingo Mobile was basking in its newfound glory, things took a dramatic turn. By November 2023, the U.S. Securities and Exchange Commission, SEC, swooped in with allegations that would shake the foundations of Tingo Mobile. Securities fraud, falsified business operations, the charges were grave. The reality was startling. Tingo Mobile, which claimed to have a customer base running into millions and a bank balance exceeding $60 million, was found to have almost no real customers and less than $2,000 in its bank account. It was a revelation that left the financial world reeling. But how did this happen? How did a company that claimed to revolutionize an entire industry end up in the crosshairs of the SEC? Stay tuned as we delve deeper into this intriguing tale of ambition, illusion, and the harsh reality of the business world. Our story takes us back to the early 2000s, to the very inception of Tingo Mobile. Founded in 2001 by Dozy Mmobuosi, Tingo started with a simple yet ambitious mission: to lease mobile phones to farmers in Nigeria, paving the way for an online marketplace that would revolutionize agriculture. By 2019, this vision seemed to be a reality, with a reported user base of 9 million farmers. Mmobuosi's next target? The United States Stock Exchange. In 2020, Tingo Mobile made its first attempt to be listed on the New York Stock Exchange, only to face rejection. Undeterred, Mmobuosi took an alternative route. In July 2021, Tingo merged with iWeb, a move that valued the company at a jaw-dropping $3.7 billion. But this was just the beginning. In December 2022, Tingo Mobile made its final leap, merging with misled, a NASDAQ-listed company. This move seemed to cement Tingo Mobile's place in the financial stratosphere. But as Tingo's star rose, so did the suspicions. The company claimed a revenue of $2.4 billion and a net income of $300 million in just the first 9 months of 2023. And then came a bold foray into the food industry, with an investment of $1.6 billion in a food processing plant and the acquisition of Tingo Foods for $200 million. Numbers that would make any investor sit up and take notice. But were they too good to be true? Indeed, the cracks began to show when investigative reports surfaced, questioning the very existence of Tingo Airlines and the operations of Tingo Mobile. The board of directors raised alarms about a concerning lack of transparency and cooperation from Mmobuosi. And then came the most damning evidence of all: forged bank statements, and the revelation that the suppliers and customers Tingo claimed to have simply did not exist. What do you think so far? Could you have spotted the red flags in Tingo Mobile's story? Share your thoughts in the comments below. And if you're enjoying this deep dive into the world of corporate intrigue, make sure you're subscribed to Investify for more compelling content just like this. The unraveling of Tingo Mobile's grand facade had immediate and far-reaching consequences. In November 2023, a decisive action was taken: the suspension of Tingo's stock trading. This move sent ripples across the financial world, leaving investors with stocks that were, essentially, worthless. The dreams of high returns vanished overnight, replaced by the stark reality of significant losses. But what about the man at the center of this storm, Dozy Mmobuosi? The consequences for him were severe. Charged with securities fraud, Mmobuosi faced the grim prospect of up to 45 years in prison. A staggering fall from grace for someone who was, until recently, hailed as a visionary entrepreneur. The scale of Mmobuosi's personal gains during this period paints a vivid picture of the situation's gravity. Since 2022, he sold shares amounting to $226 million. This fortune was spent on a life of luxury, including high-end cars and private jet rides, far removed from the struggles of the investors who had put their faith in Tingo. Mmobuosi's residence in London stood in stark contrast to the crumbling empire he left behind. This story isn't unique. It echoes similar cases like Akazu and other companies that have exploited investor unfamiliarity with foreign operations. These examples serve as a stark reminder of the risks involved in international investing and the importance of due diligence. A critical aspect of this saga was the role of remote auditing and governance. The auditors and board members, not based in Nigeria, had to rely heavily on remote verification methods. This distance created significant challenges in effectively monitoring Tingo Mobile's operations, hindering fraud detection, and allowing Mmobuosi's scheme to go unnoticed for far too long. The tale of Tingo Mobile and Dozy Mmobuosi didn't just play out in the boardrooms and the stock market. It captured the public's imagination and media attention worldwide. Skepticism about Mmobuosi and his operations was not just confined to financial analysts. It became a topic of intense discussion among journalists and the general public. This widespread doubt played a crucial role in bringing the inconsistencies and questionable operations of Tingo Mobile to light. A pivotal moment in this saga was the Athletics investigation, which delved deep into the inner workings of Tingo Mobile. Their thorough reporting revealed glaring inconsistencies that raised red flags about the company's operations. This investigation was instrumental in unraveling the truth behind Tingo Mobile's seemingly impressive facade, and served as a testament to the power of investigative journalism in the financial world. As we conclude this fascinating yet cautionary tale, it's essential to reflect on the lessons learned and the inherent risks of international investing. The story of Tingo Mobile underscores the importance of thorough due diligence. Investors must be vigilant, especially when dealing with companies operating in territories unfamiliar to them. The allure of high returns should not overshadow the need for a comprehensive understanding of a company's operations and financial health. This story is a reminder that in the world of finance, not everything is as it seems. The pursuit of wealth often leads to complex webs of deceit, and it's our responsibility to remain informed and cautious. Now, we turn to you, our viewers. What are your thoughts on the Tingo Mobile saga? Could such a situation have been prevented? And if so, how? Leave your comments below, and let's engage in a meaningful discussion. If you found this video insightful and want to keep up with the latest in financial investigations, don't forget to like this video, subscribe to Investify for more content, and check out our latest video for more financial insights. Until next time, stay savvy and stay informed.